afternoon, everyone. Today is the 3rd of May 2007, and it's about 4:45 p.m. Euro time. Yeah, I want to talk about a trade that I did not take. I missed it. Okay, not because I didn't see it. It was actually in my watch list, but because I'm already involved in another trade. That this chart, by the way, is the Euro Canadian dollar. Okay, 1 hour chart. Because I am already involved in a trade involving the Canadian dollar. The trade I am in is the US dollar against the Canadian dollar, and this chart is the euro against the Canadian dollar. So I didn't want to double up my risk and entering another trade related to the same currency pair. Because my stop loss in the other trade has not yet been moved to break even. It just hasn't run a distance enough to safely move my entry to break even. So I couldn't possibly take this one from a money management point of view. Like I say, if I go long on the Canadian dollar, meaning that I go short on the US CAD and the EURCAD, if I do it twice in two different currency pairs, it would be effectively doubling up my risk towards the Canadian dollar. I don't know. Imagine anything happening in Canada or whatever reason, all the charts related to the Canadian dollar would see definitely a spike. Okay, I just don't want to double up my risk whenever I am involved in a trade to one specific currency. I personally don't take a second trade that's related to that same currency. It's just common sense. It's money management. It's trying to minimize risk. If you are already in a trade, if you're already in a trade, don't get involved in a second trade in the same currency pair. Okay, search somewhere else for opportunities. You don't want to double up your risk. Okay. Well, unfortunately, it seems like I picked the less moving of the two setups. My trade is right now only 13 pips in profit, whereas this one has already run 50 pips for today. Quite a shame, but that's the way it is. Sometimes you have two setups. Okay, you have different options. You gotta go for one of them. Sometimes you choose right, sometimes you choose wrong. I mean, it's not that I've chosen wrongly. I'm in profit. I'm 13 pips in profit in my trade, but this one just has seen a larger move today. Okay. Okay. Anyway, let me review what this trade would have been if I had I taken it. Let's start from the beginning as usual. Moving averages all pointing in the same direction. My 30, 50 and 100 simple moving averages, they are parallel. That's another green light. Most of the time price remains below the 50. Actually, yeah, basically the whole week price has been below the 50 moving average, meaning a heavy down sentiment in overall. It's never challenged the 100 moving average, which is also good. You know that, in my opinion, the 100 moving average is a turning point. Once you see the 100 moving average crossed over by price, of course, it means that the overall trend is well, the market is just changing gears, and at least the current trend is compromised. So all my pre-entry requirements are met as far as the moving average goes. This is by my standards a perfect trending scenario, so it would be feasible for me to trade. That's why I had it on my watch list this morning. Fine. finally we see that all the rallies in this downtrend has been held by the area of dynamic support and resistance in this case, since we are in downtrend. For all of you who don't know, who haven't read about my trading system, I call the area between the 30 and the 50 moving average an area of dynamic support in an uptrend, or resistance in a downtrend. As you can see, it's proven truth to be true in this chart. Every time you see a downtrend, keep an eye on the area between the 30 and the 50. It usually holds, okay, all the retracements. Alright, have a look at this, you see. Alright, so yeah, my pre-entry requirements would have been met. Now let's zoom in a little bit into today's price action. We see a big thrust down in today's price action. Okay, this is yesterday. This is yesterday, this section here, and we saw a very clear market direction throughout today. Overnight during the Tokyo session, we've seen a retracement channel, price going up, down, up, and finally down within the channel. Okay, this is a very common setup, a big thrust down in the previous day, a retracement in the during the overnight trading range, and finally when London volume kicks in around here, we see another thrust down in the direction of the main trend. It is a very typical setup. No wonder I had this currency pair on my watch list. Shame I had already I was already involved in another trade in the Canadian dollar. It would have been a clear winner. Anyway, so yeah, big move down, retracement overnight, London volume kicks in around here, and another thrust down in the direction of the trend of the area of dynamic resistance between the 30 and the 50 simple moving average, and quite a easy trade. I mean, stress-free, few hours. It's run from the 1.5050 to 1.5000. I mean, plus 50 pips within 1 to 3 hours. I would have probably closed here about at 150.10, right above the round number. I repeat this in every video of mine. Round numbers do work as support and resistance, at least in a psychological level. I would have exited probably here for a profit of 40 pips more or less, even though it seems like it keeps going down, but I would have probably exited, in all fairness, I would have exited by now. Well, that's about it, guys. Just I wanted to point out a very nice setup, a setup that unfortunately I missed. I didn't get involved with it, even though, like I say, it was a very valid setup. Okay, very clear downtrend. But well, you know, sometimes you get them, sometimes you don't. But still, I believe I took the right decision not getting involved in this trade, considering that last thing I want to do is exposing myself to the market, doubling up my risk on the Canadian dollar. And well, as I usually say, play it wise, play it safe, and in the long term you'll be much wealthier. Alright guys, that's all. Have a nice day. Bye bye.